All righty. So we are back. So I'm just going to share my screen. Get this on here. Where is it? There it is. Okay. So basically, the stock market has gone on an absolute just a huge U-turn, essentially. I mean, the markets were kind of having this, you could call it a sucker rally, I would say, a lot of short covering and everything like that. But the stock market has significantly declined, and a lot of people are citing it to Russia, tensions that are mounting in Russia, which would explain the movement in gold. Now, the thing is, if I go, where is gold here? I got most things saved on here all over the place. I can't even see it on my own list. Oh, there it is, gold. So gold absolutely exploded today. And if you look at how it's been performing for the year, it's done actually pretty well. It opened up and it's gained significant momentum. We did have a sell-off that was mainly during when the markets were crashing, which is kind of normal as hedge funds get margin calls and try and sell whatever's liquid. And gold is definitely liquid. But it's very interesting what's going on in the Canadian dollar again. And that's what I want to show is if we look at the one-day chart, just look at this volatility. I mean, yesterday, I think it was yesterday anyway, we were talking about the Canadian dollar. And I mean, just look at what has happened. The Canadian dollar has been going into a massive range. And it's just crazy volatility. I mean, just look at these ups and downs. And that is never a good sign. Never a good sign. Generally, when you get these massive ups and downs, it means that we are going to head into some sort of correction. I'll never forget before 2020, and I think it was 2018 when the stock market crashed at Christmas time, or Christmas Eve, I think it was. But the volatility before then, it was going 2% down, 1.5 up, and it goes into these huge ranges. And that's what I'm starting to see happen with the Canadian dollar, which is not a good thing. Oil was good today. Yeah, it was good today. Oil up significantly. And that's another thing. Thank you for reminding me of that, because I want to go through oil and gasoline futures. So let's bring that up, specifically gasoline. But look at oil. It's up nearly 5%. That is bad news for the economy. I can tell you that much. It looks like it's definitely heading towards 100. 100 is going to be quite a resistance level to break. If it goes through 100 and we don't have a significant correction in oil, then I think it will go a lot higher, because you need some serious momentum to get through that, because there has got to be so many people who want to take profit on the other side of $100. I mean, because literally it's been the financial media, the analysts, everybody has been saying 100 oil for the past year now. So you can just imagine how many people have sat there taking profit around that level, and they will have, a lot of people thinking they're smart will have gone, okay, well, I'm going to take profit around 97, 96, 95. And that's why I said if we gain significant momentum and we just go straight up through it, then that is a sign that there is serious volume and strength in that. And especially even right now at 93.90. But I'm pretty sure this is the high. Oh, no, 94. Oh, yeah, that was today, though. Yeah, so today was the high set. And you can see that there's some big volume spikes there. and just look at the volume spike. It's kind of insane. So there is a lot of volume there. So another thing, if we go to gasoline futures, which are somewhere here. So gasoline futures, again, I mean, just to give it, because everybody's going to be looking at their pump prices right now for gas and going, well, you know, it's 150 a liter or whatever it is, or wherever you are, it might be more than that. I think here, I can't remember what it is now, 150, 160 a liter, something like that. I think it's 150 a liter. It just got up to. So bear in mind, when we reached the peak in gas prices back in October, that was 248. And we're now at 274. That is a huge increase, you know, 12.5% or whatever it is, if my math is any good. So that means that gas prices are going to go up a lot in price. So that's going to be incredibly interesting, because if you look at gasoline futures and we take it to the 5-year chart here, you can see, not the 5-year, the maximum, you can see that right before 2008, we were up at 340, and we're getting into this range of which we haven't seen since like 2010, 11, 12, 13, 14. And those weren't good times for economies around the world. I know that those were still in recovery mode after the GFC. So this is not good news. And the interesting thing was bonds went up and yields went down. But I was interestingly looking at the JNK, which is junk debt, and that's still sold off today. It sold off not that much, but it's still sold off. So again, the sell-off is just continuing of junk debt. I mean, just look how much this is down from the start of the year. So junk debt is for high-risk companies, obviously, and they pay a higher interest rate. So you got to remember that because they're paying that higher interest rate, it's not good, because that means that if they haven't got the money and they're heavily in debt, which they are, we can just go and look at the private debt to GDP in the States and Canada, and it's sky high, then it's not a good thing. So, and a lot of these corporate bonds, even the high yield corporate bonds, they're selling off. Investment grade was up slightly, which is more safer. The yield's only 2.48%. So you can kind of tell how risky it is by the yield. But yeah, it's kind of incredible what's happening. Everybody's looking for the safe havens, it seems. But the interesting thing, guys, is the CPI is heavily weighted using gas prices. So you have to think, if they're going to spike by a lot, which is looking like they're going to spike by a lot, then that's going to mean the CPI is going to go up a lot. And I don't know, I find it too hard to call now whether Canada will hike come March. I really don't know anymore, because I'm starting to think, and I was saying this to Jess, I was saying, you know what? If Canada hikes, then they're going to be blamed when everything goes downhill, which it is already, guys. We're heading into a recession already. So with or without them hiking rates, it doesn't really matter. It might be a more slow and painful thing if they don't hike, but nevertheless, it will still be the same. So I'm kind of on the fence. I'm 50-50 on whether they will actually hike. But it's really quite interesting, I think, because if they don't hike, that could seriously weaken the currency and send the CPI even higher. And you have to remember, like we talked about yesterday, the CPI, as measured by the government, is completely corrupt. So if you use an accurate measure, then it is totally different. It's about 16-17% inflation's running at. So inflation is destroying the economy anyways. So it's really whether they're just going to leave it as is, let inflation destroy the economy, and then come in when we hit the recession, then come in and say, hey, we need to tighten rates, and everybody will be begging for them to tighten rates. And then we'll see that Paul Volcker type of action. Because now I'm thinking, you have to think in terms of politics and monetary policy, is that these people don't want to take accountability for any of their actions. And I'm afraid to say that's the world we live in. Politics and in monetary policy, nobody wants to take any accountability for their actions. So in the space of doing that, when thinking about doing that, the way I'm thinking about it is they may hold on the rates because they know the economy is deteriorating really quickly anyway. Let the economy go into a recession, and then they're going to be begging for those rates to go up because inflation will remain high. It will remain high even if they increase rates because they won't do it enough. And that's the main thing. So if everybody comes in and then basically says, okay, please raise rates, and then they raise them and they bankrupt everybody by doing a Paul Volcker type moment, and that would be a massive debt reset and deleveraging. I mean, then it would kind of, they would, I don't see how they back down on that, but it seems to me like we're reaching the end of the road for modern monetary theory, because modern monetary theory has really been a thing for only the past 22 years, since the dot-com bubble. And it was later even in Canada, because Canada didn't really suffer the dot-com bubble, and they rolled that into the GFC, and then they created this bubble kind of on top of a housing bubble already. So when you think about that, it's a little bit different, because you have to remember CPI was extremely low for the past 22 years, and now it's extremely high. And whether you're measuring that with the government's stupid corrupt index, or you're looking at the real costs that you're paying, that has a direct effect on the economy. Because if I'm paying $600 more a month for gas for my car, that's $600 a month I don't have to spend into the real economy. And what compounds that issue even more is I've just overextended myself on a home, and now all my costs have gone up. So everybody went for single family homes, biggest they could buy. They cost the most money to heat. They are the most affected by the energy prices going up. So those people are ultimately getting screwed the most. The thing is, it's just absolutely insane. I find it ludicrous that people just kind of sit back and think this inflation will just sort itself out and it'll be fine. No, it doesn't work like that. We're paying seriously more money for energy costs. I did a poll. There was over 350 people responded, and I had some incredibly bad responses from people all over the world. Some people had their energy bill, it had gone up 80%. Like in Finland, one guy said it had gone up 100%. His bill had doubled. And when that happens, there is less money flowing into the real economy. And people don't feel rich, even if their house is going up in price and they're trying to use that as an ATM. They don't feel rich if their balance sheet is shrinking each month and they've got less and less and less and less. And that's really the thing. So it's going to be interesting really what happens, I think, over this year, because this year, if they do go down the road of not hiking rates and they let inflation destroy the economy, then I think it will be even worse in the end, because I think what they're aiming to do is create enough pain in the public sentiment that they then go, hey, please raise rates, please raise rates. Look at this inflation. We are now, they'll basically see the destruction of inflation, low interest rates, and an MMT, and then it will be like it's the end zone. So it's absolutely insane. It's beyond ludicrous, Luke. Well said, man. Many will be in a world of hurt not too far down the road. Yeah, check out Revert to Means as well. He's bringing real content, and he's a small channel, bigger than mine, but a small channel nevertheless. And we all need to stick together because, you know, one thing that frustrates me a little bit about YouTube is they don't really prioritize small content creators. There's no way when you're even searching for stuff, which annoys me because I like to see the smaller channels, because I know with the smaller channels, people don't sell out as much. So I'm getting more real information. However, you can't rank search results on YouTube based on the amount of views or subscribers that the person has, which is kind of sad. But yeah, it is absolutely insane. If you think the market is going to crash, why not buy puts? I've been shorting various stocks in the market, so it's needless to say, and I'm still in short on quite a few stocks. So I'm not, I mean, it's mainly those hype stocks that I think will just absolutely crater, and they're nowhere near the target that I have for them. And I mean, it's just the volatility is insane. So trying to go long on the VIX or anything like that is a recipe for disaster, because the VIX has gone up to nearly 30, down to below 20. You can't have a stop loss. I mean, the amount of risk you'd have to put in that to make the trade worthwhile would just be ridiculous. So it's not worth doing it. But yeah, I just find this very interesting. I just think that there is a chance there that they don't raise rates, and then what happens? And if the Canadian dollar goes down against that, remember, there's a Fed meeting that's happening next week, and a lot of people are pricing in now a 50 basis point hike in the US. So if that happens, that will mean short-term yields like the 5-year will explode in value. And that will mean that people will go to the US dollar over the Canadian dollar even more so than they are now. And just think about what we saw here on Yahoo Finance. I didn't even mention that actually. So oil is up nearly 5% and the Canadian dollar down. So that just shows you that there's a lot of selling going on in the Canadian dollar, because look at this decline, how quickly that happened. It took pretty much all day to get up there, and then it took how long? 2 hours to get back down. So it took the whole day to get up there, and that's the classic taking the elevator up, or taking the stairs up and then jumping out the window on the way down. It's just absolutely insane. So if the Fed hikes by 50 basis points, I have no idea what that'll do to the currency. You know, I say it might go down, but who knows? It could explode in value because people think the American economy is just going to collapse under its own weight, because the amount of debt there is absolutely incredible too. So it is just absolutely... There are a lot of inflation pressures that can't be resolved with rates. Why is nobody talking about this? Yeah, no, that's true. So what you're probably talking about is stuff like supply chain issues. The thing is, you can actually solve everything with rates, but it's not going to be good for the economy, because if you jack rates up 20%, people are going to be spending way less on goods and services into the economy. The economy would go into a depression, and you wouldn't have any inflation. You'd have no inflation, because all the supply chain issues that we have are because you've got too few amount of goods and too large amount of dollars, and there's too many dollars chasing those too few goods. And that is why we've got this blockage of the supply chains. It's also to do with the shutdowns that have happened, but it's also to do with the fact that they artificially stimulated the economy whilst they were shut down. So it's a big problem that they did that, because if they just let it, I mean, there's no case really in saying, oh, it would have been better if they just let it go into a depression now than later. We're never going to know. So it's really no point speculating. The Fed is so far behind, it's laughable and sad. Keep that dry powder around. Yeah, the Fed is really far behind, but I think they're going to be ahead of places like Canada still, because Canada is just in so much trouble with debt. And as you can see, the Forex markets are pricing that in, because oil up 5% and the Canadian dollar is down. I mean, that's just insanity. In fact, I'm going to go back now. We'll bring it up again, and we'll do this right now live to show you. Okay, so last time crude was at around this price, and so like 2013, 2014. That's when we're talking about, when it was last at this price. So 2013, 2014. Now let's go back and look at 2013, 2014. So yeah, the Canadian dollar was trading between 90 cents, between like 90 and 97 cents. And right now it's trading between, like, what is it now? 70, 76 and 80 or something like that over the past 6 months. Yeah, so about 81 and 77. So way less. So, and that's just to do with the debt. And really, the Canadian dollar has just been on a downward spiral ever since the GFC. And no wonder, because that's when the credit bubble started. So it is just absolutely insane. Feels a lot like the 1920s combined with the 80s inflation. Yeah, I agree with you there. And if I go to that shadow stats thing, which I'll try and bring up on another tab here, we can see here. Let me share screen. So dry here right now. I was hoping that the mechanic was going to give us a call. So if I go stop screen, let's go share screen, tab. Where is it? This is for the US, by the way, but the same thing applies for Canada. It's just a joke that, here we go. Okay, so let me see if I can zoom in on this a bit. Yeah, that works better. Okay, yeah, that's better. So this is basically using the 1980s inflation basket. So this is before it became a cost of living index, when it was still actually measuring the price of things going up. Whereas now it's not. They use substitution and all different kind of things. George Gammon from Rebel Capitalist did a great video on this the other day. But they update this every time the US reports inflation. Now, unfortunately, we don't have the same thing here in Canada, but we can basically take this at face value, because most of our imports come through the US, or are traded in US dollars. So our inflation rate is exactly the same, if not even higher, because of the weakening Canadian dollar over the past 3 months. So the inflation is incredibly understated, as you can see. You can see that on this official CPIU, that it goes up to 7.5%, which is where we are right now. You can't see my mouse on there. But look at where the 19, oh wait, I'm looking at the wrong one there, sorry. This is the one I want to look at. So this is the 1980 based. So if you look at this, it just shows you how much the CPIU understates inflation. But even though they understate inflation, look, it's still breaking out. That red line is still going hugely up, way above any time. The last time it was this high, according to the CPIU, was back in the 80s. This was before, doing QE and all this kind of garbage was a thing. So the fact is that this could be the real ending for MMT, because the MMT practices are not going to work when you've got inflation going this high. So whether you want to believe it or don't want to believe it, inflation is running 16% right now, according to the 1980s based CPI. So if we went back to 1980s and we were having the CPI right now, it would be running at 16%. Just think about that. Get that in your head. That is huge. That means that, for example, here in Calgary, rent prices were down 2%. Actually, real terms, they fell 18% in 1 year. So really, who is winning? The person who goes and buys a home, which is 20% up in price, or the person who goes and rents a place, which is 20% down in price in real terms. And that's what people really aren't looking at. And at the end of the day, housing should not follow inflation. Housing should follow wages, because that is the ultimate thing that underpins the housing market, is what people can afford. There's been so many cycles of when housing prices explode away from wages, and every single time it ends in a banking crisis. Would you believe it? But this could really be the end of modern monetary theory as we know it, because how on earth can they continue this? We're going to do lower interest rates and more stimulating if inflation is running this high. It's like pouring gasoline on inflation. So people would lose faith in the currency completely, and they would start to turn to alternative methods. And it's like I've been saying for ages, people get pushed and pushed and pushed and pushed. They eventually snap. And that's what's happened with all the convoys we're seeing around the world right now. And the same thing would happen with currency. People would be pushed and pushed and pushed. They would realize this is useless and resort to their own methods, be it, gold, silver. I don't think it would be those, to be fair, but it could be Bitcoin. It could be whatever. It could be something else, something completely decentralized. We have no idea. But the fact is, people will lose faith in that currency. It's already happening to a larger degree. I guarantee a lot more people own gold and silver than before 2020 right now. And that's because people have less faith in the currency. And I don't hold gold and silver as an inflation hedge. The reason I hold gold and silver is simply because it's an insurance policy on the money system here in Canada collapsing, which I think is a significant, well, not significant, it's a slight probability it could happen. Because if they do decide to go down that road, and let's say they do it on their own, oh my God, yeah, I think we'd end up we could anyway, guys. It would be a total experiment if the US raises interest rates and then Canada didn't, or worse, they actually lowered interest rates. We could end up like Turkey. And what is going on in Turkey, trust me, you don't want that to happen. That is a bad thing to happen. So yeah, inflation is finally getting mainstream reporting. See gold today. Yeah, if we go to gold, well, actually, I showed it a minute ago. I'll do it actually. Let's go slide, share screen, Brave, Yahoo, share, let's go. So if we go back to gold, yeah, it's up. And if you look at some of the, like I hold a lot of Newmont, and this isn't saying go out and buy these stocks because I don't want you to, but just look at where this has gone. It is absolutely, definitely going up. And even when gold was going down, the minor stocks were actually still doing well, which is a sign that even though the gold price was a bit iffy at one point, and I think it sold off like 1 or 2%, these were still holding steady. I mean, this is up nearly 6%. That's quite a big move for Newmont. And another one is this one right here. Probably pronounced the name wrong. But again, I mean, this one is definitely worse. It's been sitting at more lows of recent, but they're doing a takeover, I believe, with another. I forget the company, but I'm pretty sure that they're taking over one other company. But yeah, and yeah, you're right. They all pay dividends as well. So that's the thing. And a lot of these banks, the people there's a lot of Canadians that love these bank stocks, the Canadian banks, and just look, just look at where they are on the map. And it's just insane. And let's go to Wells Fargo. Well, not well, that's a bad example actually, but Bank of America. So look at where Bank of America went right before the GFC, and look where it is right now. It's not even at the highs. So I think this looks incredibly similar to if we go back to Royal Bank. Yeah, look at this. Dip, massive explosion. So could we be in that final phase? Because it certainly looks like it. This is not sustainable. This run that it's been on from May 2020 is not sustainable when the market crashed. It's just absolutely insane, considering how undiversified, Royal Bank is more diversified, but this one is not. The CIBC is not diversified. Literally all their money is made in mortgage-backed securities and mortgages. So I would not, I wouldn't touch this stock with the 10-foot pole. It is not good, but yield selling off. But yeah, interestingly, silver wasn't up that much today, which really shows gold showing its strength there. And looking at some of these other things, again, lumber down, but still up significantly, like near the highs where it got up to 1,700. It's just absolutely insane, some of these stocks. So I got all the hype stocks here, some of the hype stocks, and just look at Tesla. So Tesla, one of the biggest hype stocks, and just look at it on a chart. I mean, look at it on the yearly chart. It just does not look good. And I saw that Kevin O'Leary is buying Meta. I don't trust that guy. I really don't trust that guy after he's been peddling Bitcoin so hard. I don't trust it. And that's not saying that I don't believe Bitcoin has some type of future. That's not saying that. But I think I don't know. I mean, it's impossible. It's like speculating on a tulip bulb. Nobody knows whether it's going to go up 100% tomorrow or down 100%. You're essentially just gambling and hoping. But yeah, just seeing if anything else catches my eye. The pound. Okay, so the pound also up against the Canadian dollar. And look at this. The pound is also rising against the Canadian dollar. So it's not just the US dollar, it's also the Canadian dollar. My safe bets and stocks are stuff I can touch: land, food, tools, silver. Yeah, you know what? You're exactly right there. I'm kind of the same way with a lot of stuff. Like I hold a lot of physical gold and silver that I keep in a vault here in Calgary. And you need to have some of the physical stuff, in my opinion anyway. It's not financial advice. Land, debatable these days because of obviously the land prices being so inflated. Food, 150 million%. We all need food. Problem is, here in Canada, we can't grow it. Unlike Revert to Means there, who can grow all his own food in his backyard. And we don't have that benefit because of the weather. So puts us at a disadvantage. And it actually means that we rely more on the US supply chain for food, which is even worse in some ways. Canada doesn't even have its own. It doesn't produce all the food it consumes, and that is not a good thing. So it's always good to stock up, and I've been saying that since September. And since September, the shelves have just got worse and worse and worse. And this isn't just happening in Canada. You can go to revert to means. You can see he does all these walkarounds of grocery stores and stuff. And you can see that the shelves are just as empty there. So this is happening across the continent. So it is absolutely insane. So I think I'm just going to leave it there, guys. I don't really think there's anything else I need to talk about. I got to figure out whether I got to go pick up my car because it's getting towards 8 p.m. Basically, my car is getting fixed right now. It's having 2 new struts, and the guy said the bolts sheared off, which is an absolute disaster because the mounts that these bolts go into, guess what, guys? He can't get the part through the dealers because of supply chain issues. And, you know, it's all good until it's not good. And that's what kind of annoys me about a lot of people, is because they're like, I'm okay. You're okay until something happens. And then you're screwed like everybody else. You can get screwed by this so fast. This inflation, supply chain issues, it is really, really just crazy. But markets down across the world looking, it's not just here. Surprisingly, the Hang Seng in Hong Kong is holding steady and Bitcoin's down. Now, Schiff had an interesting thing we'll just say about Bitcoin. I was listening to his podcast when I was working out this morning, and he was saying he reckoned that there would be a dump before the Super Bowl, and here we are. It's dumped already. So again, he got that right. Listening from Jamaica, same issue here. So tell us about in the chat what's going on in Jamaica there. At least you got the better weather than we've got here in Canada. Although the weather has perked up a little bit here in Canada, it's not as bad as it was. But yeah, anything you guys want to talk about in the chat there, throw it in the chat and we'll have a talk about it. I'll bring it up on screen. Yeah, Schiff is the man. He is the man. I love Schiff. His podcasts are just excellent. He's really engaging, I find, to listen to. Some people are really have a monotone voice, and it's just he's really good, and he makes it kind of comical as well, I think. I keep looking at the screen over here because that's where the chat is, but the camera's right here. So I have to keep thinking about that. A 2% down day, not a calamity. No, yeah, that is true. It's just the volatility really that is telling. I mean, we've been up and down and up and down, and it is just insane. I prefer Lynn Alden. Yeah, I don't listen too much to Lynn Alden. I should really listen to her more, but there's only so much time in the day these days. Supply chain issues in Jamaica, inflation out of control. Yeah, it's a worldwide thing. And I'm not sure, Jamaica uses the US dollars, I'm pretty sure. So they're pretty much at the mercy of what's happening with the dollar. But it's surprising to hear that same thing is going on in Jamaica. But I suppose maybe Jamaica gets a lot of its goods through the US, which is having supply chain issues as well. So it has this knock-on effect for the Caribbean, because I suppose most of the stuff would be coming from the US. So that kind of makes sense. But yeah, no, it's just kind of absolutely insane. So I will see if there's anything else. MBS, mortgage-backed securities, were flat today. But interestingly enough, actually, let's bring up the MBS thing. How long have we been going here? 39 minutes. But we got a few people on here, so let's bring up this, because this, you might be surprised with what's going on. Brave, MBS, share. Here we go. Okay, so this is the MBS dashboard. So basically, you can see that this is, we unfortunately don't get the ones for Canada, because Canada and data is just so hard. But this is mortgage-backed securities for the US, and they're about to break $100. So the way this works, and you can see this in real time, is mortgage-backed securities, when they go down, the interest rates are going to go up, because they basically, it's the same thing as treasuries. When treasuries go down because they're selling off, the yields go up. So if mortgage-backed securities go down, that means the interest rates go up for people, even if they're on a variable rate. So the mortgage-backed securities have been selling off pretty hard because they're inversely correlated to the treasuries, as you can basically see. Treasuries down, but what I've noticed is the mortgage-backed securities, they go down way more when treasuries go up. So even though they're inversely correlated, it's really interesting that they're selling off more. It's not like a similar thing. So it's kind of interesting. It's always a good idea to keep an eye on this website and see what's going on with MBS, because if MBS for some reason starts deteriorating really bad, then there's a big problem. And you can see it right here on this website. The funny thing is, we were talking about on one of these live streams before, the, oh God, trying to remember the name of it. Bespoke tranche opportunities, BTOs. And they have been going crazy. Let me see if I can pull up that article, because I can believe it. I watched The Big Short, which is one of my favorite films. And at the end, it says about how they started selling bespoke tranche opportunities in 2015. And then I saw this article that was very recent that was saying that, is this it? And it was like one thing. So, because basically, although demand in recent years has been synthetic CDOs locked in. Yeah, okay, so let's pull this up, because once again, I think this is important. It's very underreported. Things that are underreported, they grab my attention more than things that are reported in the mass. So let's bring this up. So basically, this was August 16th, 2021. So basically, it tells you about what is a BTO, and it's basically the same thing as a CDO. And then basically it goes on about the pros, the cons. But interestingly enough, it said somewhere here, although the market is opaque, let's highlight this. So although the market is opaque, demand in recent years has been robust. In 2018, trading volume in synthetic CDOs clocked in at more than 200 billion, according to a Reuters report. To some, this may echo loudly of the financial crisis, when banks faced cascading liabilities from leveraged bets on pools of loans that went sour in some cases despite the sterling credit ratings. So it's pretty interesting. It talks about the pros and the cons and everything like that. But this isn't the article that I was looking at before. But you know, that is a lot of money. $200 billion going into synthetic CDOs, not just BTOs, synthetic BTOs, which is even worse. If you don't know what that is, go watch The Big Short, because that is just a great, great movie to watch. So, yeah, JP Morgan, bank manipulate silver and gold price to USD to keep currency tradable. Yeah, I mean, they're going to do that because it's in their best interest at the end of the day. And they're essentially working for the Fed, which is kind of at the center of all this nonsense in some ways. So I think that, yeah, they're trying to keep that dollar stable. They have a vested interest in doing that because they own so many treasuries. They don't want the dollar to collapse. But it's very, very interesting Big Short is great. Oh yeah, Margin Call. Margin Call is a fantastic movie. I actually really like that movie. Yeah, I don't know which one I picked was better actually. Margin Call. A lot of people find that more boring. It's definitely less of a theatrical. Oh God, I can't get my words out tonight. My throat is just killing. But yeah, it's more of a theater, The Big Short, whereas Margin Call is showing you actually what was going on in the bank. I think it was either Bear Stearns or Lehman. It's like trying to portray what was going on, all the board meetings, everything like that. It's very interesting. That I'm getting them all muddled up now. There was another one with Shia LaBeouf, and not sure if that's Margin Call or another one, but there's another one with it's not Gordon Gecko, or is it Gordon Gecko? I forget that. Yep, CMHC makes the mortgage-backed securities package in AAA subprime loans look like Lehman Brothers. Yeah, you know, insured mortgages are subprime mortgages here in Canada. They call them insured mortgages, but they're basically subprime mortgages. So they just don't call it, not The Wolf of Wall Street, but that's another great film to go watch. I forget the name of it now. Oh God, I gotta find this out. Just quickly. Wall Street, Money Never Sleeps. That's what it's called. That is a great film. I would highly recommend going and watching that film because it shows how the banks ganged up on, I can't remember if it was Lehman or Bear. It was one of them. But if you go watch that movie, it's incredible because I'm sure. And if you actually, after I watched that movie, I actually went through and fact checked some of this stuff. I like to always watch these movies, kind of sad, and then see what was real, what wasn't. So you know, because obviously they do make these things more into a drama. But yeah, it's very interesting anyway. But anyway, guys, I'm going to go because I'm losing my voice here because it's so dry in this room. But thank you so much for watching. It's been a fantastic live stream. I've enjoyed speaking to all of you. You know, what we're going to probably do in future live streams is I can have you on here. I've just got to experiment with exactly how to do that. So thank you so much for being on here. Smash the like button so people see this in their feed. We'll see you in the next one, guys. Peace.